Christian Roberts, President, Prime Managing Partner at CREO Capital. They will be presenting the financial agenda in order to discuss economic policy changes for Latin America and the Caribbean in 2022.
Good afternoon, everybody. Thank you, Arturo and SAHIC, for putting this great event together. It's great to be back. During the next couple of minutes, we're going to talk a little bit about the financial and capital markets related to hospitality and tourism. And I have two of the leading players in that sense, especially from the multilateral front in our region. So let's take advantage of that and dive right into it. Sanaa, as country manager of our Central American region for IFC, what is your view on tourism and hospitality as a capital provider? And basically with two twists to that question. One, in a circumstance like the one we lived in the last couple of years where the macroeconomic variables were basically blurred, and normally those are the hotel performance indicators or the drivers of hotel performance indicators. How do you manage that from the capital market perspective? And then where do you see opportunities now that we're, I would say, safe to say, out of this pandemic?
Thanks, Cristián. Buenas tardes a todos. Very nice to be with you here today in person. My first conference in person after more than 2 years, so definitely happy to be here. Back to your question, so, and I work at IFC. I'm the regional manager for Central America. We are the largest multilateral institution in the world dedicated specifically to the private sector. For us, tourism obviously is an important sector. It's one that we've been dedicated to for many years, and the reason is clear. We are in development. It's very important in terms of creating employment. It provides huge benefits to the whole supply chain, not only in the hotels themselves, but clearly all the jobs that are created around that globally. And particularly when you look at certain subsectors of hotels, the all-inclusives, for instance, and their impact on the whole supply chain around them. If you look at certain countries where the economies are 100% almost related to tourism, Maldives, for instance, we've developed significant expertise in the sector. We've done in our deal sheet more than 300 projects, more in about 100 countries globally. About $4 billion in investments to date across regions with a specific focus on East Asia and Pacific, Latin America, and the Sub-Saharan African region. Obviously, I don't need to give you more details. You've heard throughout the whole day, and everybody in this room knows how hard hit this sector has been, unfortunately, since COVID started, specifically due to the restrictions on international travel and all the losses that we've had in terms of revenues and also in terms of employment. We talked in 2020 about a little bit over 60 million jobs globally that were lost, and we're hopefully going to make up for sometime in this year or next year at the latest. And right now, everybody's reading and listening to the current war that we have in Ukraine and the conflict between Russia and Ukraine. Luckily, this region does not receive a lot of tourists from that region. So not that much impact if we compare Latin America, for instance, to certain countries in Europe, to certain countries in the Middle East, such as Dubai, for instance, as one of the favorite destinations. But we might be indirectly hit as excess capacity in these countries might attract some of the tourists that historically come to Latin America. In terms of the opportunities and what we look at, and I'm speaking here again from the perspective of IFC as an investor, and that provider in the tourism sector, we see 4 key areas. One of them, which we did a lot of at the beginning of the pandemic, and that's in terms of providing liquidity to tourist companies, hotels, and so on, to kind of help with really weather those first 3 to 6 months of the pandemic where pretty much everybody was closed down. We did several projects globally. I'm just going to highlight some of those. We did $150 million dollars facility for the Shangri-La hotels, for those of you who are familiar with the chain in Asia. Here in the region, we did 2 projects with the Xcaret Group in Mexico for about $90 million. Those of you who know the Mexican market know that this is one of the key players with a huge impact on the local economy. And we've done also recently a PE fund investment. That's the first area. The second one is additional capacity. And here we're extremely selective, so we're going for partners that are well known, that have a proven track record, that know really the sector very well, and are already on a good financial standing for us to help them with that increased capacity. And we are right now, for instance, looking at an investment in, I can't say the country, it's still ongoing, but it's a large investment, over 1,000 new rooms with one of our partners that should hopefully see the light very soon. The third area where we're very active is the whole support to financial institutions, and we've done lots of work in capital solutions, particularly for financial institutions, so that in turn they can lend to the SME segment, and many of these are part of the tourism sector, so they're indirectly benefiting from our investments. And the final area, and I'll stop after that, is the advisory space, where we're extremely active in terms of doing lots of hand-holding, specifically in the green and climate area, for many of our clients in the tourism space, or clients of clients, let's say financial institutions, to help them be leaders in that space, readjust some of the existing buildings so they are EDGE certificate, so that they are more energy efficient, to reduce the operational costs and really help their performance look better, and help them attract potential investors like us, our friends from IDB, for instance, that are more and more looking at this sustainable and climate angle.
Okay, thank you. I think it was very, very clear. Rogerio, as head of real estate and hospitality at IDB Invest, you have a view of the entire region, and some of our markets changed quite a bit over the past couple of years, some more than others. How do you read those markets where you don't have macroeconomic variables that are clear in any given moment, from your perspective, especially if you're trying to deploy equity, such as what Sanaa was saying right now, to help, to grow, to improve? How do you measure that risk?
Well, happy to be here and sharing the panel with Cristián and partners like IFC, who we've done projects together in the past. When the pandemic hit, we have the triple sudden stop that we call it, right? There was a reduction in mobility because of the lockdowns and people not being able to move. You had a reduction in trade, both in volume and prices. And then you had the financial flows, both direct investments as well as remittances. And that created a situation where we thought we were going to have a lost decade in Latin America. Everyone was extremely surprised to see how quickly we were able to recover in 2021. To the point that commodity prices, they were significantly depressed, and yet today you see meat, soy, oil, obviously, copper, among many other commodities that have fully recovered and even exceeded the prices that they were before. So that provided some normalcy to the region, which is giving some comfort in terms of macroeconomic indicators. As it relates to the situation of specific countries, the biggest concern remains to the fact that governments had to step in and provide a lot of support and subsidies to a variety of sectors within the economy to keep them solvent. And that created a debt burden that is of proportions we have never seen in the region. So now there's a significant amount of pressure to issue fiscal reforms in Latin America and the Caribbean. And those fiscal reforms, as you know, are highly questioned by the taxpayer because they're in need of capital, and yet there's a fiscal reform that is going to put an additional burden. So the biggest concern going forward is what is going to be the government's ability to be able to reduce the debt burden. Now, as it relates to the tourism sector, and we've heard throughout this morning, the positive news is that recovery is on its way. And depending on the market that you are, whether you focus a little bit more on leisure, whether you focus a little bit more on domestic demand, you have been able to recover in a decent fashion, and many markets have already exceeded a 2019 performance. So what, as an institution that is counter-cyclical, just to give you a frame of order magnitude, last year we had a record year in terms of approvals. Over $23 billion across our public side, which is sovereign lending, and the private sector. Never had we done that volume of activity in the region, which indicates not only our role as a development institution, not different to IFC, to be there with our partners when the region most needs it, but also trying to weave through the tea leaves, and understand what is the resiliency of a variety of sectors and what is the ability for it to recover. And tourism has proven to be one of those industries that, despite being significantly battered, it is turning around. And whenever you have a situation of daily leases that you are able to adjust pricing based on demand, you're able to be much more creative and adapt to situations. So back to your question, our thought process is that there is an ability to assess risk, even in a situation where there is a volatile environment, where there is a lack of visibility going forward, but the strong fundamentals of the system should allow for continued investment and debt to exist.
Thank you, Rogerio. Sanaa, sometimes it feels we walk out of one to walk right into the other one, right? And right now we're walking into a period of high volatility and inflation. Real estate typically is seen as a flight to safety alternative investment. In that same sense, what would you say about hospitality within that aspect?
So again, speaking from the lens of, and everybody sees things differently, but I'm speaking from the lens of a global investor and debt provider. This is a risky segment. It's a very risky segment. That's how we look at it. It's more of a long-term investment, and like commercial property, real estate, you're really looking at a long-term investment. You have to be at the right place at the right time, the right capacity as well, and it's really dependent on the cash flows. I mean, how sustainable are they, how reliable are they, and how long is it going to take you to recuperate your initial investment. And of course, every hotel is different. Every hospitality asset is different from the other, and there are many factors that come into play. And even putting COVID on the side and the externalities on the side, at the end of the day, you're really talking about supply and demand. I mean, that's the equation that you have in place. So the way we look at it is, if you have a demand that is steady, predictable, and then you have a supply that remains limited and adequate, then you're in a win-win situation, obviously. But if you have a demand that is unreliable, as we are these days, and a supply that keeps increasing, then this is not a good investment. In terms of how we look at it as well on our side, and where our efforts are going to be focused going forward, as I mentioned, I mean, our initial focus was, let's stand by our portfolio clients, let's provide liquidity, working capital solutions, so that jobs are protected and businesses keep running. But also in terms of potential investments, the capacity project increase that I mentioned earlier, we're very selective, again, because of the riskiness that we perceive in this segment. So we try to look for partners that have very diversified portfolios. We all know, for instance, that hotels that cater mostly to conferences and business have been much more hard hit than others. So you want to see a partner that has quite diversified portfolio, a mix of business hotels, of budget chains, heritage hotels, luxury, and so on, which you can rely on different segments as you're doing business. We're looking also at the quality of the sponsors quite a bit, the knowledge of the sector, a proven track record, obviously good financial position. We look as well at the green aspect that I mentioned earlier, which is extremely important for us in doing business, and sometimes we link loans to the climate and the green focus of the operation as well, as we make sure they're Paris aligned and they're going into the decarbonization efforts that we have as some of our mandates. And then we also look at innovative ideas. We want to see what's extra, what's the new edge that we have here, what is this new operation going to bring forward, compare to the competition, be it in the region or in the country as well.
Thank you, Sanaa. Rogerio, what are your thoughts on that sense as well?
I mean, from our point of view, we see that there are a variety of investment partners at a local level. When we think about banks, for example, almost every single transaction that we do, we have a local bank that we bring along in order to help with the expansion of the local capital markets. So when you think about the role of development financial institutions like ourselves, there is a specific area where we can be most accretive. And when you think about the region, is the size of the deals and the complexity is something that DFIs are well equipped to be able to support. So think about deals that are $75 million plus, $100 million plus. The local banks typically do not have the ability to write those types of checks, and large institutions like ourselves are able to not only think through ticket size, but also the complexity of the deal. When there are innovative concepts, whether it is development of new destinations, new concepts that are coming online, for example, everything related to lifestyle hostels. We did a significant investment in a Selena platform, which is a regional player in the region. New concepts requires a significant amount of effort, which DFIs are typically willing to put in the time to think that through and finalize the transaction. And the last area is everything related to SEG, social, environmental, and governance. Those projects that are trying to push the limits of sustainable and responsible development, trying to do things in a different manner to the way it's been done in the past. We try to identify those demonstrative examples to be able to showcase this is the way that you do something different, this is the way that you do it right. So whether it is having supported the first LEED certified hotel in Jamaica, the first LEED certified hotel in Costa Rica, focused on some of these innovative concepts. Allenda is a distribution platform not different to Oyo hotels from India. They came to Mexico. Unfortunately, it's a case study of an introduction into a new market that was not successful. But Allenda is a similar platform based out of Colombia that is growing regionally that we invested on recently, and it demonstrates the ability to support small independent hotels, get them to have distribution, get them to have a solvency in a moment that is very critical for the sector. So I think there's a role for a variety of players in the sector. We tend to see each other, ourselves as partners with local commercial banks and trying to assist in projects that have certain characteristics that fit our development impact mandate in the region.
It's interesting because, and I'm leaving a couple of things out, but my take from this is that the quality of the sponsor is definitely very important, but then both of you in your answer are saying, those innovators, those that are willing to take the next step to transform, to improve, we're going to back you. And that's an interesting approach from both of you, and obviously as a multilateral development bank, it makes all the sense.
Exactly.
Larry Flink, who is CEO and chairman of BlackRock, said recently, or actually a couple of years ago, but he said, climate change is a business opportunity because addressing it will require that virtually every segment of industry will have to be reinvented. In other words, we're walking into the green economy, and that might be 5 years from now, 30 years from now, 50 years from now, but that's a reality. And he makes reference to a green premium that various players are now willing to pay. The end user, willing to pay a higher ADR because the hotel has good ESG practices or is doing good in terms of climate action. The investors, the bankers, and then the market. And in the market, people are going to be willing to pay for more for your stock if it actually does good to the planet, et cetera, et cetera. In that direction, how do you see this apply to hospitality? What have you seen recently? And maybe we'll turn it around and start with you, Rogerio.
The term that you're describing is basically impact investing. And what we've been hearing for the past 3 to 4 years is that transactions, they need to be something more than financial deals. They need to have impact. And what is that impact? It is not only environmental sustainability, but also social sustainability, which is how are you activating the local value chain? How are you working with the local community? How are you doing something that is different and responsible for the long term? Now, this sounds very pretty in theory, but in actuality, there is research that shows that those projects that are able to generate local development impact, they are more sustainable long-term from a financial point of view, meaning that when you have an employee that is from a vulnerable group that has been able to now participate in a project and is fully committed to that employer, to that project, is going to stay for longer. It's going to be more loyal, is going to provide a different type of service. And that connectivity that happens with the local community and the project is extremely tight. So over time, the ability of that project to withstand trepidations and market shocks is going to be better. So the thought about impact investing, it is what DFIs have been doing for over 60 years. I think we're finally getting a little bit of credit that that's the way that you should select and filter deals. But it goes beyond the environmental aspect. It is thinking about the entire spectrum of stakeholders that are affected during the various decision-making processes. Now, clearly, everything related to climate change, climate resiliency comes front of mind, but thinking about the social sustainability is key. Everything related to digitalization and those trends that are coming online are also elements that we discuss. This month is Women's Month, so there are enormous efforts to close the gap on gender equality. We need to be able to rise women to a different level. We talk in Latin America about 54% of women participate in the labor force. In the Caribbean, it's about 59%. And at first glance, those statistics look extremely promising and good. But within the tourism sector, a lot of those women, they participate as housekeepers, they participate in the kitchens. Very few have supervisory or top executive positions. Actually, in the United States, I think it's only 7 or 8% of women who are CEOs of companies. So the discussion around gender equality is not only how do you close the gap, but how do you provide opportunities for that growth to continue in the future. So when the CEO of BlackRock says those businesses, they need to be reinvented, it is a matter of trying to understand that deals, they're not financial in nature, but they need to activate the local communities. And that's the mindset that needs to be different. When I'm signing a franchise agreement, a management agreement, when I'm employing my people, what am I going to do different than I was doing in the past?
Okay, thank you. Sanaa, in that same line, and I'll do a 2-in-1 in sake of time. What do you see, or what role do you see natural capital playing in LATAM within this industry that is experiential? And then one closing question, what do you see for 2022 and going onward?
Look, I mean, and I totally agree 100% with Rogerio. I mean, you do have, it's the days of just doing financial modeling and looking at the IRR, which is still a big component that drives our investments. But those days are long gone. I mean, a good project is multi-layered. So obviously you have the financial performance and what's the expected cash flows and the region and all the fundamentals of the project itself. You have the sponsor quality, integrity, due diligence, and so on that we do. You have the whole environmental and social, the sustainability, the governance practices as well of the company itself. And then you have the whole gender angle that Rogerio just mentioned, where indeed, unfortunately, when you go to the C-suite and when you go to board level positions, you have very few participation of women in other industries as well, but perhaps more so in the tourism industry. And in my sense, not only as in the right thing to do, but this is a huge opportunity cost for these companies, because at the end of the day, most of the time, the drivers of going to a hotel A or Hotel B is going to be the wife, is going to be the matriarch of the family. So not having that representation at the level of the board of someone who understands this segment and really influences the decisions is just, to me, a no-brainer that you do need to have parity at those levels so that your strategy that the board is driving really takes into consideration the women participation. In terms of where we're looking at demand and where things are going in the future, obviously none of us has a crystal ball, but at least in the short term, we do expect still quite a bit of domestic tourism. Just because it's easy, people want to go to places that they know, that are reliable, and that more or less under control. We are all hoping and prayer that Omicron was the final wow moment of COVID, that after this we're going to move on to more or less normal lives. But clearly going with that comfortable space is going to be the way going forward. A personal experience back in December, my family, we were trying to book vacation, and we haven't been on any, and we spend all of our extra income on vacation. We love to travel, but we haven't been able to do anything since COVID started. So almost our last wow vacation was in Asia back in January, February of 2020. And so we sat down and looked at different locations, but because of the situation, we have small children that are not vaccinated yet. So we said, well, let's stick to places that we're comfortable with. But because of the whole situation, we came up with plan A, B, and C, just in case one of them doesn't work out. And all of the destinations are places we know, we're comfortable, we know the health system, we know how to get in and out, we have friends and family. First destination was Morocco. We had the tickets, we have everything set in space. 1 week before the trip, Morocco closed the frontiers of the whole country for 2 months. So luckily we could recuperate our investment in the vacation, so there goes our option A. Option B was a country in France in Europe, which again, we know the system, we have family members and so on. And right again, because of the increase in the cases and the situation in the hospitals and so on, and the family that we were supposed to travel with got COVID also a couple of weeks before, we said, okay, this is not gonna work. So we went with option C, which was California in the US, a country we know well, we know the medical system. It's not too far away to fly from here, and we just felt comfortable. We'll hit the airport, we'll rent a car, we know where to go, we knew the hotels very well. So you kind of have that. I mean, yes, it's not super domestic, but it's regional. It's the unknown to me that will probably take a little bit more time to become mainstream again, unless things are fully under control. And again, the situation of COVID, the restrictions, the quarantine requirements will influence a lot of this demand that we're seeing. And in general, I mean, I think not only, and I know most of hotels, unfortunately, are coming this in a really financially strained situation, but they have to look at all the other elements that we mentioned earlier, you know, the gender, the sustainability, ENS practices, board practices, governance, digital presence, which we know is even much more so important than it was prior to COVID started.
Okay, thank you. Well, we're out of time, but I would say that...
Didn't Raul give us 2 minutes? No?
Sure.
Go ahead. See you.
Go ahead.
I think when there's no doubt that our region has been disproportionately affected because of COVID. But and it's also important that we cannot look at all these statistics on a global basis. What's happening in the Caribbean is phenomenal. You know, the recovery of the leisure market is outstanding. And all of that push towards all-inclusive is a trend that is here to stay. I believe that you know, this is a model that is quite interesting. However, the challenge that I would pose to all of the major companies that are looking into the sector is all-inclusives can no longer be the large, big boxes of the 1980s. You know, you have a customer who is more sophisticated, who is looking for authentic experiences, who wants to explore the countries. So how do you create this product whereby the way that is sold, it's all-inclusive, but you're allowing the guest to go outside of the compound to enjoy local experiences, to enjoy the country, and then to be able to come back in the future because there were things that were left unseen and that important. So I think the evolution of the all-inclusive product is key. And secondly, thinking about our region as a whole, it is extremely fragmented from a capital markets perspective, from a product point of view. You look at third-party management companies. You know, there is significant room for consolidation and for that sector to be to get sophisticated over time. So I think that the takeaway is that when you look at investment in the region, both from an equity perspective, but from a debt point of view, there is opportunity because of that fragmentation. There is a return of the fundamentals that is gradually coming back. And the sentiment when you talk to these capital providers is that you have the fundamentals to be able to analyze risk, price risk, and be able to invest for the midterm starting 2022, 2023, and beyond. So from IDB Invest, we continue to be excited about the region, excited about the sector, and we have ability to continue to be active in the region.
Arturo Florencia, sorry for the delay, but when the banker asks for time, we have to give it to him. Rogerio, Sanaa, thank you.
Pleasure.
Thank you, everybody.
Pleasure. Thank you.
It's now time for a crucial subject, climate change. We thank Elaine Merovic, Head of Division in charge of Advisory Services at IDB Invest, and the head responsible